morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. The Dow racked up gains on Tuesday as investors weighed up the prospects of an eventful economic restart against earnings from banks that point towards further coronavirus-induced pain for the economy. Yet again, we saw stock markets rally on what was considered slightly better than expected data around the health aspects of coronavirus. There were growing signs that hotspots such as New York were starting to see a number of hospital admissions fall, as well as the number of deaths. This is seen as a sign that the US is actually starting to win the battle against COVID-19. However, what the movement in markets fails to show is just how much the economic impact after the virus has gone will affect global markets. The fight against coronavirus is not just a health-related one, but is also an economic-related one. Yesterday, the IMF issued a stark warning that the global economy could be in store for one of its worst recessions ever, as they stated that there had never been a recession approaching with such ferocity. The Gloomy warning followed predictions on GDP, which showed the US contracting by 6% and the UK by 6.5% in 2020. The fact that the pandemic spread so quickly meant countries had virtually no time to prepare their economies for the lockdown. However, it's not only the preparation time, but that nobody had any experience in just what sort of pain this would bring. Elsewhere, earnings took centre stage yesterday, as they will do for today and for the rest of the week. Earnings from JP and Wells Fargo underscored the expected economic damage that lies ahead, as both banks reported a steep contraction in earnings on the loan loss provisions and warned they may need to stock away more money to offset anticipated loan defaults for customers. JP have set aside over $8 billion. The rally on Wall Street was dominated by the FANG stocks, which rallied more than 3% each. Today sees economic data for March released, which will be closely watched. This is the first time that data switches from February, which had no virus impact, to March. US retail sales are going to be the key reading, and that could well paint a mixed picture, as hoarding and panic buying at the start of the lockdown could well boost this number in other areas, while other sectors could well be extremely depressed by the lockdown.